Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance.
Hello and welcome to another episode of the Wall Street Lab podcast. Our guest today is Gregory Zuckerman, author of The Man Who Solved the Market, How Jim Simons Launched the Quant Revolution. If you haven't read the book, I highly recommend you to check it out. Greg is a special writer for the Wall Street Journal, a 22-year veteran of the paper, and a three-time winner of the Gerald Loeb Award, the highest honor in business journalism. Aside from The Man Who Solved the Market, Greg wrote The Frackers, the outrageous inside story of the new Billionaire Wildcatters, or The Greatest Trade Ever, the behind-the-scenes story of how John Paulson defied Wall Street and made financial history. In this episode, we talk about his job as a journalist for the Wall Street Journal, how he finds the stories he writes about in his articles and books, and we get into his book, The Man Who Solved the Market, and what lessons he learned from his research about and interviews with Jim Simons himself. Jim Simons is the founder of Renaissance Technology and probably the most successful trader of all times. If you like this episode, please leave us a 5-star review on Apple Podcasts or wherever you get your podcasts from. It really helps us to reach more people like you, and that means we get ever more interesting and more exciting guests. So thank you very much. And now, without further ado, our interview with Greg Zuckerman. Hello, Greg. It's a huge pleasure to have you on the Wall Street Lab podcast. I am really excited to have you. I loved your book, and I'm really excited about our conversation today.
Great to be here. Great to be in touch.
So to start, can you tell us a bit about yourself and maybe especially what do you do as a Wall Street Journal special writer?
Sure. So, I've been at the Wall Street Journal for nearly 24 years, and I write about a lot of different themes and topics, but I mostly write about investors, generally hedge funds and other kind of big types of investors and how they make money, how they lose money, what they're up to. I'll write about other topics too, but a lot of what I do is sort of telling you what the big money is up to, how they're making money, losing money, that kind of thing.
Sounds really interesting. I think as we're in the middle of Corona, you had quite a lot of ground to cover over the last couple of weeks.
It's been a little crazy. Yeah, I mean, as a human, as a citizen, it's a very discouraging, sad time. But as a journalist, there's a lot to write about. Every day, there's something else I could be doing. Markets are in flux, a lot of turmoil, and some people making money, some people losing money, some people just trying to save the market. And for a while, it was unclear whether we even had enough stability, enough transactions, not enough trading, especially in part of the debt market. So there's a lot going on, but as a journalist, it's a good time. There's a lot of interesting things going on.
Can you tell me, how did you get to where you are today? Did you study journalism or finance? And then how did you develop that interest in hedge funds and the markets?
I always had a passion for investing. As a young person, I was trading. I didn't have any real money, but whatever I had, I was trading and usually losing. But I always enjoyed investing. I enjoyed the world of business, reading about it, investing to the extent I could. And I went to school and thought that's what I would do after university. And I came to Wall Street at a bad time. It was right after the 1987 crash. It was a few years later, but there was a little bit of a delay. And I didn't really know anyone. And I went to a liberal arts school where I did well, but I didn't really take that much in the way of finance, and I couldn't get a job. I really couldn't. So I spent a few years trying different things and I started some businesses and some other types of work. And then one day I saw an advertisement to be a journalist, a financial journalist. And I took a test because I didn't really have any clips. I had no experience. I never thought about being a financial journalist. And I loved it. I said, wait, they're going to pay. I love finance and I love writing. My father was an academic. My brother's an academic. So I like writing and I like finance. And I was like, wait, they're going to pay me to write about Wall Street? How much fun is that? So I kind of stayed and worked my way up. I started at a trade publication and went to the New York Post and then went to the Wall Street Journal. So I just sort of fell into this career. It wasn't something I set out to do, but it's something I very much enjoy. So I've stayed with it.
How do they say, get a hobby that pays you and you will never work a day in your life?
That's exactly right. I believe in that. It's not easy. It's hard to set out to do that. But yeah, even if I won the lottery tomorrow, my wife always says I'd be back at work the next day and it's fun. I get to discuss markets and finance and the world with some of the smartest investors and individuals out there. And I get to tell the world what's really happening. Someone who actually is doing poorly when they think they're doing well, or vice versa, or some interesting trades. So I get to break stories, and I could tell the world about companies doing things that are bad or wrong, and I get to uncover some of the things that maybe they're doing wrong and maybe improve the world a little bit. So yeah, I'm a very privileged person, very lucky person.
How do you go about writing your articles? Do you find does something pop up on your radar and then you're like, okay, this is something I want to do?
About a third of the time, there's somebody within the Wall Street Journal empire who has a request. Hey, Greg, can you take a look at something? About a third of the time, I get a tip. Somebody who I know, somebody who trusts me says, Greg, I'm hearing XYZ. You should check it out. And about a third of the time, it just sort of hits me in the shower or something on the way to work. Hey, it'd be interesting to look at something or investigate something. I wonder if something is happening. So that's more or less how it results, the stories result.
Is it also how you go about your books? Because you've published about sports, about finance, and about fracking. How did you come up with those topics? How did you decide what you want to write on?
It's a good question. On the surface, they're not related, but in some ways they are. So it only occurred to me, I was talking to a group of young students a few years ago, and when I told them my story, one of the students made a good point that I'm an outsider myself in a lot of ways. I didn't go to journalism school. I'm not from the world of finance. And that's been effective for me. I see myself a little bit as an outsider, and all my books are about outsiders who succeed. So my first book is about the individuals who anticipated the financial meltdown, the 2008 financial meltdown. And one in particular named John Paulson, who I write about, was a merger expert. He knew nothing about bonds and credit and housing. He didn't know anything about that. And yet he made $20 billion, he and his firm, over 2 years. So he was a real outsider. And then I wrote a book, and that book was called The Greatest Trade Ever. And then my subsequent book is called The Frackers, and it's about some Americans, often immigrants, older, stubborn, odd, unusual, colorful, and they are the ones who found all those oil and gas in America over the last few years. It wasn't the big companies, Chevron and BP and Exxon. They had given up on America. So once again, it was sort of some outcasts and outsiders. And my most recent book, The Man Who Solved the Market, is about Jim Simons and his colleagues at Renaissance Technologies, this hedge fund in Long Island. And they don't come from the world of finance. They're mathematicians. They're scientists. They have an approach that until recently people used to mock and made fun of, using computers and black box instead of intuition and judgment. And yet these individuals who I write about are the greatest investors, greatest traders modern finance has ever seen. So, and even with my sports books, I wrote 2 books with my 2 sons, and it's for young people, but it's trying to inspire young people. It's about sports stars who overcame challenges in their youth, and it could be racism and poverty and physical differences and sexual abuse and other kinds of abuse. But each of these people in some ways was an outsider, had to overcome something. So I am fascinated with how individuals overcome challenges. And in some ways I'm selfish. I want to learn from it myself. We all go through things in our lives, and I'd like to be able to handle my challenges in a better way, and I think we all do. So I do tend to write about those kind of themes in my writing. Yeah,
it's really interesting. How did you decide on writing about Jim Simons?
As a Wall Street Journal veteran and somebody who writes about big investors, I kept hearing about him. It's hard not to. He's got this crazy track record, up 66% a year before fees since 1988, 39% after fees. And he was a mystery. He's a very, very secretive individual, secretive firm. So it's intriguing, and it's also a challenge. I like the challenge. At the time, I don't really enjoy it because it makes my life hard, but I like the challenge of writing about people that don't want to be written about, or tell the world a story that hasn't been told before. And again, these are very secretive people. They didn't want to talk to me. They didn't want the story to be told. So in some ways that set up a challenge for me, and I like a challenge.
I think it was the same thing with the Frackers, right? Usually nobody could interview them. Nobody did get access to them. And what do you think, in your opinion, made you different, that in the end, they spoke to you, that you got access?
It's a good question. And for Simons and his colleagues, they were told not to talk to me, and Simons told people not to talk to me. And eventually people did come around, including Simons himself. Partly I'm persistent. So I may not be the smartest guy out there. I may not be the best writer out there. I'm a good writer. I work on my writing, and I'm bright, but there are smarter people than I am. But I don't know that many people who will outwork me. So I'm persistent. So I believe that there's a reason everyone will talk to me. I just got to find that reason. And it takes me a little while sometimes. Doesn't always work, but usually it does. People usually come around. So partly is I'm persistent, but partly also I think the individuals, the characters in my books, they realize I take it seriously and I don't want to make a mistake. I work very hard to avoid mistakes. It's not to say that there won't be mistakes in my books, but I think people realize that I take it seriously and I want to get it right. I want to get the story right. And I'm pretty fair. You know, you could make criticisms of my work, but I think I'm generally fair. I don't think of these traders or business people as bad people. They're as good or as bad as any other profession. They're good people, they're bad people in finance, etc., in business. Some do really good work, some don't. Some help society and some don't. So I think if I'm trying to be objective, I think people realize that I take it seriously. I don't want to make mistakes. I tell the story with all sides. And some people don't like that. So a lot of the characters in my books, they would spend hours and hours and hours talking to me, but later they're not thrilled with how the books come out because I tell the full story. I don't deify people. Again, with my characters, people come away with my books. Often people have said, well, Greg, I like the book, but I don't know if I like your characters. It's not clear to me if I like them or not, which is fine. I think that's kind of life. Life's full of gray. It's not black and white. And my characters aren't black and white. It's not clear if they're heroes or villains. A lot of writers like to have heroes and villains, and it's a little easier that way and for audiences, but I'm not a big believer in that. So it's a long-winded way of trying to explain why people talk to me.
I think it makes perfect sense. I mean, on the other side, if you portray every one of your character as a hero or as a villain, the chance is that you will always get to talk to the people that want to be portrayed as the hero, even if they are not, and then you either represent them wrongly or they won't even talk to you at all because you know you're going to make them into the villain.
Yeah, I think you're right. And people are sophisticated. I think some people are sophisticated and they realize that it's better to be portrayed accurately as possible than to be portrayed as a hero because people are skeptical. You read a book and deify someone and makes them look like they have no fault, blemishes, and it's not realistic. So there are some people that appreciate that approach, but I do find that I write about successful people often, and when you're very successful, when you're a billionaire, you tend to, has been my experience, my observation, you tend to start having only fans around you, only yes men or women, people that only tell you how great you are. So then when you pick up the book and you realize that, well, geez, Zuckerman writes about the mistakes you've made also, they're not thrilled with it, but in some ways they're much more approachable. So you can root for them. So there's an individual named Harold Hamm in my book, The Frackers, who grew up dirt poor. He was the 14th of 14 children. People made fun of him because he had no background in the energy business. He kind of came off as a country bumpkin, as we say here, came off as someone who didn't really have any sophistication. And yet he created a real empire. And he's one of the people that found the most oil and gas in the United States. And I find that you can root for somebody like that. He came from nothing and he turns it into something big. But frankly, Harold Hamm didn't like the book. He didn't like the portrayal because he didn't like to be portrayed as someone simple at one point. In my earlier book too, John Paulson, I kind of say no one really gave him much credence and didn't respect him that much before the greatest trade ever. And yet they did afterwards, but he didn't like that. He thought he always was a big deal on Wall Street, even though he wasn't. So it is what it is. Yeah, I try to tell the story as accurately as possible, and some people will like that, some people won't.
Can you give us a bit of a quick history that you also cover in your book, The Man Who Solved the Market, about who is Jim Simons? I guess everybody knows, but just to give a quick history of the Renaissance Fund and Jim Simons.
Sure. So Jim Simons is a fascinating individual. He grew up in Boston area in Massachusetts, the United States, always had a passion for mathematics. People around him told him, you can't make any money in mathematics. Ironically, he's worth $23 billion today. But he decided to pursue it, and he got a PhD in mathematics, and he taught it for a while. And then he left to work for an organization that was helping the United States government in the Cold War in terms of breaking code, secret code of the Russians, a little bit like Alan Turing, if people are familiar. And that was a fascinating part of his career. Then he left. He got fired from that due to politics and his opposition to the Vietnam War and some other kind of reasons. He left to help restart the math department in the United States at a university called Stony Brook University. And it wasn't a well-respected university at the time. And he really was able to turn that thing around, and kind of it was quite impressive how he hired people and different professors from talent from all over the country. And then in 1978, he said, you know what, I think I can figure out this trading, this world of trading, investing. And he left. He gave up a really storied career. He's really one of the most important geometers of the past 50, 100 years. And a lot of his work has still had impact in the world of mathematics and also in physics. But he left it all to see if he could trade. And it took a while. From 1978 until 1990, he really went back and forth, different approaches, and sometimes it worked, sometimes it didn't work. But he finally settled on a real pioneering approach. And one of the reasons I wrote about him is he really is a pioneer. He is the person people on Wall Street look up to, because he embraced a quantitative approach. The idea of, instead of using judgment and intuition and instinct and research, he decided to build models, mathematical models that dictate his firm's trading. And at the time, no one was doing this, or very few people were doing it, I should say. And he figured out a way to use these preset predictive algorithms. Today, predictive algorithms govern our lives. Amazon and Facebook and Netflix and Tencent, all the big companies have embraced predictive dynamic algorithms, but models. But no one was doing it in the late 1980s when Jim Simons started developing it. And you could even say he's a pioneer when it comes to artificial intelligence and machine learning. No one was doing that kind of thing. So in so many different ways, he's a pioneer. And it took a while, and I write about it in the book, and there were lots of setbacks along the way, but they figured out a way to make a lot of money trading everything, especially equities today, but they'll trade other things as well.
What do you think, or what did you get a sense, or what was your sense of why he was so successful? What did he do different?
There are a lot of reasons. I think there are a lot of reasons, maybe 20, 25 things they do better than everybody else. I write about them in the book, but together they create a successful firm with a steady stream of returns. And then what they did in turn is use that steady stream of returns to leverage, to borrow money from Wall Street and create really crazy returns. But they have advantage over everybody else in a lot of different areas. Their data was always much better. They were collecting data when no one else really cared about it. They were cleaning it, as we call it, keeping it accurate, but no one was doing that. And he also manages in a different way than other people. You know, in some ways, my book is as much a management book as it is a trading or an investing book. He hires people in a different way. He gets them to work together on the same page. They're very cooperative, collegial at the firm. Unlike other places, everybody knows what everyone else is doing at Renaissance. There are different ways that they manage and they hire than others. So there are a lot of little things that they do better than everybody else, and it adds up into a much better organization. But at the heart of it, they're not trying to predict things. They're not trying to predict where the market is going or individual investments. It's all about relationships among investments, relationships among stocks and other kinds of investments. And that's a different way to invest, and it seems like it's a successful one.
How do you think that he was able to recruit such great people? What made the difference in terms of the culture that he created?
Part of it is he recruits different types of people. So he doesn't recruit people who've worked on Wall Street, who have a background in finance. He sticks to mathematicians and scientists. And some of those people that come from academia, some want to make more money. Some are just a little bit frustrated with the pace of work in academia, where it could take years before you see the results of your hard work. And with the hedge funds, you have a daily profit and loss statement. And some people like that. Some people just like the challenge of, and he was able to challenge them and to lure them by presenting investing as a challenge. A lot of these people didn't necessarily want to get rich, at least when they first got there. Over time, they did. But when they first got there, they didn't. But Jim Simons was able to say, well, come over and check out what we're doing, and you'll see it's as much of a challenge as anything in academia. And he was right. It really did work, this approach of presenting investing as a puzzle. And a lot of people at Renaissance, at his firm, really do enjoy a good puzzle and a good challenge. And he was able to present it accordingly. So he's got this way of persuading people to, well, come over and help us out once a week. See if you like it. Oh, I don't like trading. Yeah, you may not like trading, but you may like the puzzle. You may like the challenge. You may like working with some of the greatest mathematicians out there today. And he brings them all together. So it is a pretty fascinating approach, just in terms of hiring and persuasion.
It doesn't really sound like a mathematics professor at all, does he?
Well, that's a good point. I mean, that's one of the reasons why he's so successful. He can do the math. He is a quant, but he also understands people. He's very unique in that way. He knows what motivates people. He hires people well. So that might be the most important reason why they've done so well, is because Jim combines both worlds. He can motivate people, but he also can do the math.
But Jim is now mostly stepped out of his role at Renaissance Technology, right? And is focusing more on philanthropy. Do you think that impacted the returns of the fund, or how it is run, in a negative way or in a positive way? Or how do you think his way of thinking could be contained within the company?
I would have thought it would have hurt them, but it really hasn't. That's partly due to his talent in terms of hiring good people, but it's also the fact that the people that took over for him are really talented in their own way. So Robert Mercer and Peter Brown were the key individuals in discovering a way to make money in stocks. So Jim Simons, some people have even commented in the book, well, yeah, he's smart and all that, and he hires well, but he wasn't responsible for the algorithms, the key ones. And it's true. And it's a little bit like maybe with Apple and Steve Jobs. Steve Jobs was the architect of the organization, and that's kind of what Jim Simons did. And he was able to step back as a result, because Peter Brown specifically, he's the CEO today. He's really talented in his own way. He works unbelievably hard. There's a real urgency within the firm. They continue to do really well. I'm a little surprised, but that they, especially with more competition out there than ever before in terms of quant trading. But yeah, they've done really well. They continue to do really well.
You said a good keyword there, competition. Do you think there are other firms that are currently getting closer? Because the thing is, if you only have like a 1% edge over everybody else in 20 different things, right? It is possible to replicate the success, or do you think it's still impossible because it's so many different things where it's just 1% better than everybody else and that compounds?
Well, the people internally have always emphasized to me that their system is a really complex one. I mean, we're talking about, I think it's 30,000 lines, C++, and it's tough for anybody to leave and take the system with them. So they're very open internally, even if they're secretive externally. And you would think with more competition, there'd be people that can do what they do. But again, it's a really hard system to put all the parameters together. In some ways, they see it as a feat of engineering more than a feat of investing or trading. And all kinds of inputs and parameters are into one system. So there are other firms that have done quite well in their space, but they do it a little different way too. They're not high frequency. They're not in and out. They trade a lot. They're sort of medium frequency is what we call them. So there aren't that many people that do what they do. There are a few names I can name, firms that have been successful doing it. So they don't have as much competition as you might think. It's just hard to put a system this complex and complicated together, but it may not last. So far they've done well with it, but I'm a skeptical journalist, so we'll see if it can continue, but it has till now.
How do you think will AI and the current race and the availability of more data, of better AIs, will help new starting funds or other companies in the future to get at the point where they are now?
Yeah, so they don't. Other people have used AI and have done so successfully for different areas of finance, for execution, sort of making the actual last trade, some for research. It's hard. They don't believe, the people at Renaissance, and they're the experts. I'm not. They don't believe the market lends itself to a fully AI in the way that academics and people view it. They use machine learning for sure, but they don't think there's enough order out there in the market. There's order, and that is what they focus on, but not quite as much as maybe you need to be fully machine learning and just turn on the switch and let the thing go. So their model, they do learn. It does learn on its own, and there are elements I write about that in the book, but it's not fully AI. There will be competition in that area, in that realm, the AI realm. They just do it a little bit differently than others, though.
Was there anything while interviewing Simons or writing about him or interviewing other people that struck you the most, or that kind of stood out to you in terms of, it could be anything, in terms of personality, in terms of investing knowledge, or just anything else?
Well, I mean, part of the beauty of writing a book like this is getting to meet so many interesting, fascinating characters, and that's kind of why I do it as well. I find it really interesting, and I'm able to learn from all these individuals. So there are a lot of individuals, different types of characters in my book, and I think I learned a lot from the mathematicians, and I learned that they're a certain type of personality, but it's hard to generalize about them too. So there are some who do it, approach life in a certain way, but it's hard to generalize about all of them. I guess that's one of the reasons I wanted to write the book. I want people to get a sense for these kinds of personalities, the people at these firms, the mathematicians that play a more important role than ever in society. So I hope, when people read the book, they'll be as fascinated by these kind of characters as I was.
As many of our listeners are still in university or in their early days or like mid-level careers in finance, they often think about, okay, where does my next career step take me? Now, from a half insider, half outsider perspective of yours, did you see that any particular skills a company like RedTech might be looking for, or that young professionals that they should develop?
Well, Renaissance itself looks for people who have accomplishments in the world of academia. They like scientists and mathematicians, as I said. They like to hire astronomers, physicists in particular, mathematicians, computer programmers. But broadly, Wall Street and society is just becoming much more quantitative. So I think everybody, my own children, they're not mathematicians, but I encourage them to start dealing with data and analyzing data. And it's true everywhere on Wall Street. When I talk to people on Wall Street, everybody needs to have some background, some comfort level with data analysis and the quant approach. So that is where things are going. I don't care who you work for, what kind of firm it is. That is the direction. I'm trying to get more comfortable myself. It's a little too late for me, but to the extent I can get more comfortable. It's part of the reason I wrote the book as well. But yeah, the only advice I would give is try to find, to the extent you can, try to find some competitive advantage, some corner of the market or the world of academia, or even if you're not an academic or a mathematician, something that you do a little bit better than others. I'm a big believer in some comparative advantage to the extent you can discover one.
Do you find, and maybe going beyond as you already did and into the world of Wall Street, do you see any kind of traits that get hired especially well, or any kinds of traits that kind of stick out in the best performers versus the worst performers?
Well, they're all super, super confident people, bordering on overconfident. And I'm not sure that's a trait you necessarily want to embrace, but it seems to help. It does seem to help. This ability to ignore the skeptics, ignore the doubters. And that's true of kind of all the people I write about. And it's a good trait to have. Sometimes the skeptics and the doubters have good points, so you want to listen to them. But people I often write about, and it's a self-selecting group, but people I often write about are those who've ignored conventional wisdom, be it those in my first book who said, okay, I don't care what the experts say, the housing market around the world is going to collapse and it's going to take the financial system down. And there were very few people saying it at the time when they did, the people I write about in my book. And again, the second book, The Frackers, they ignored the conventional wisdom that the United States was running out of oil and gas. And Jim Simon didn't even care what skeptics said about his approach. And I write in the 1990s how few people wanted to invest with him. So there is something to be said for ignoring the skeptics. It doesn't always work, but it did in the case of the people I write about.
It's a bit of contrarianism.
Yeah.
Greg, I want to be respectful of your time. Do you have any last tips, anything you want to get out there before we wrap up?
I would definitely encourage people to reach out to me when they read the book. I'd love to hear what people have to say, constructive criticism or compliments, anything. I'm open to hearing what all readers have to say. So feel free to email me at the Wall Street Journal, or I'm on Twitter, or I'm on LinkedIn. I'm easy to find.
Perfect. Greg, thank you so much. This was super interesting. I already am curious to see what is going to be your next book about, what outsider that wins over this particular field that he or she chose.
Yeah, I'd like to hear myself. If people have good book ideas, they can reach out to me too.
Okay, perfect. I'll let you know if me or any of our listeners has an idea. And then thank you so much, Greg, for doing this. And
sure.
I'm looking forward to hearing from you again.
Okay, have a great day.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
Disclaimer. Information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. This podcast is for informational and educational purposes only, and it does not contain an offer to sell or buy any sort of financial products, and should not be treated as advertisement for such. Any copying, distribution, or reproduction of this podcast without the prior permission of the creators of the podcast is strictly prohibited.